Some of the great and the good, people with millions and millions of views, are saying that's not right.
And you have to respect them in a way that maybe you didn't just 4 years ago.
Don't mess with creators. This is a scam. This is crazy.
Happy New Year, Simon. Thanks for joining us.
Happy New Year, Rex. Good to be back.
So I thought if it sounds good to you, we'd talk about the alleged honey scam, if that sounds good.
That sounds like a plan, because I can't escape this on my feed anywhere, and it's fintech adjacent. Every creator seems to be absolutely up in arms about this quote-unquote scam, and I thought I might take a second to just unpack like my understanding of what happens here, what's meant to have gone wrong, and why now there's potentially even litigation involved.
Yeah, I want you to walk through it, and just for users' context, Honey is a browser extension, applies discounts. It got acquired for $4 billion in cash by PayPal. The transaction closed around end of 2019, early 2020, sometime around then. $4 billion cash. That's one of the biggest exits ever in fintech. M&A is hard. And now we're finding out how that is hard with some litigation that's come to light. That's new litigation, but is about practices at Honey for quite some time. So we'll have Simon kind of dive into this. And we'll go a little bit narrow about what Honey is alleged to have done and why that matters. But this is litigation. Things evolve. This is going to take 2 to 5 years to settle. So really what we're going to talk about, too, are the big trends generally that this applies to, because I think it's a really powerful way of thinking through some of the most important questions, not just in tech, but also in fintech. So, Simon, why don't you walk us through like what are the actual allegations here?
Creators in commerce and creators in financial services generally, yeah, there's a lot to cover there. So the way it would usually work is when I go directly to an e-commerce store and I have the Honey e-commerce extension in my browser, then it would pop up at checkout and it would try and offer me a bunch of different discounts potentially, or even Honey Gold, which is their reward currency, for using them at checkout. And that's all fine and hunky-dory, but where this gets a little bit different is, let's say I've watched a video on YouTube. In that video, I've seen a product placement, and I really like that product. So I want that product, so I'm willing to click an affiliate link at the bottom of the YouTube video in the description to support the creator. And an affiliate link, as many of you know, should kick back a little bit of any future sales back to the creator, which is awesome. And then you get to the website and you go to check out, but because I have Honey installed on my browser, the affiliate link when Honey runs is removed and replaced with a Honey affiliate link, and any tracking back to the creator and therefore any payment that the creator would have got for sending that user to the e-commerce website now does not happen. So the creators, and this is some of the great and the good, people with millions and millions of views like Marcus Brownlee, like Penguin Zero and many others, are saying that's not right. This is a scam. This is crazy. How is this possible? And of course, they have big audiences, so when they say it, it gets a lot of attention. So I guess don't mess with creators. But let's dive in, Rex. Like, talk me through, what do you think the implications are of creators more broadly, and what the themes are that kind of sit around this?
Yeah, and to set some kind of a sense of the scale of types of things going on here. So $4 billion acquisition. There's about $30 billion spent on YouTube per year. I think the big creators, their audiences have just surged. MrBeast, I don't know exactly where he was in 2020, maybe 100 million. Today, he's north of 300 million, so a third of a billion subscribers. And he's just one. So to your point, one of the big things here is creators are incredibly ascendant, and you have to respect them in a way that maybe you didn't just 4 years ago, whether or not you agree with any allegations here. And if you think about creators, this lawsuit was launched by a lawyer who is himself a creator. Now he has another law firm and other folks who are part of that. And the way they launched it was with a YouTube video. And so just the way in which we engage in dialogue, creators are increasingly powerful. You go back to 2019 or whatever, Elon Musk couldn't get an invitation to the Electrical Vehicle Summit at the White House. Today, he's the troller-in-chief and like a big advisor to the incoming administration. So just fundamentally different how we think about engaging with audiences and content. And I think that's one of the biggest things here. But then there's some more interesting kind of tech-oriented things about who controls what. And those are some of the bigger trends that I think are interesting to talk about.
I think the implication I saw was, I can't think of many fintech companies that have had, or financial services companies that have had issues with creators or have partnered with them. The only one that comes to mind, of course, is Current. They've done an awful lot with MrBeast several years ago. But this is probably the beginning of a trend, not the end of a trend. I had a page on the State of Fintech report which said the vast majority of a bank's customers are spending more time watching YouTube than they are consuming any other media. But you don't see many advertisements for financial institutions inside of YouTube. So your users are there, but your advertising dollars are not, and your engagement with them is not. And I think that's a real shift. You fundamentally have to understand this ecosystem if you're playing in commerce, if you're playing in payments, if you're playing in finance. And this alleged scam is one consequence of maybe not having understood that, or maybe having not thought through this one particular edge case, way ahead of time, which is very difficult for any team to do. But the whole changing how advertising works, changing how you engage with an entirely new brand is something for the entire payments and financial services sector to consider.
In this specific case, the class is creators. They're also consumers, advertisers, merchants, YouTube. This is specifically about creators. This case itself will take 2 to 5 years to litigate, and that will be interesting to follow. But I think, so we talked about probably the biggest trend, which is just creators are ascendant. And then related to that is maybe number 2, which is that is changing commerce, because one of the big business models or ways to acquire consumers in commerce is advertising. Advertising is everyone's least favorite business model, except for all the others. And you can see why, because when the end user isn't the one actually paying directly for the thing, there's this weirdness that goes on behind the scenes that might be abstracted away. So I think advertising, like the original business model of the internet, it just always has these kind of problematic elements to it. I think the other kind of big number 3 that is probably the biggest tech-connected story is that platforms rule everything around you. Why does Google want to be the browser? Why does Apple want to be not just your OS, but your wallet? Why is Facebook building, Meta Ray-Bans? And the answer is all of these companies have learned time and time again, if you don't control platforms, you can get rug pulled. And here, in the case of creators, they don't own YouTube and they don't own Chrome, and there's an extension in Chrome that can control the traffic that they generate. And so this story is about, what does Google control versus an extension versus YouTube? YouTube's also Google. So thinking through platforms and who the platforms are and why they matter, that's always one of the biggest questions in tech. And it intersects with regulation, because often regulators will define rights of the various constituencies. And then that can determine within reason, we have content moderation rule, user-generated content, you're not liable for it. Section 231 is a big thing that determines which platforms are actually able to arise in the first place. So how you shift liability and user permissioning is one of the fundamental inputs to understanding which platforms win and why. And that is a big part of this conversation, is who owns what and why.
I want to link all of those 3 themes together with an example. So I think we saw Kim Kardashian and several other celebrities were actually sued by the SEC and had action taken because they were advertising crypto products to their users via third-party platforms like Twitter and others, and Instagram. And when they advertised them, they had perhaps unknowingly contravened a regulation in that process, and then kind of admitted fault and paid the fine and moved on. And when you have this just explosion of new platforms and this democratization of the ability to create content, then potentially you can get yourself in hot water with the US government very quickly because you didn't know that there was a regulation there and you didn't know that something else had gone wrong in the first place. So advertising is so crucial. And we are in the attention economy. Anybody that can coalesce attention and drive it to a product is extremely valuable. But what product are you driving it towards? And how does that attention get to the product and the purchase in the end state? It's really clean if I just do a search for a product or go directly to a website. But so much of the work is about getting them to land on the website, to convert, to discover it in the first place. These things are intimately connected, and there's all kinds of data problems all the way through the pipeline. From, how did I come into the website, and then how do I get reactivated by them and retargeted by them? Because in the middle, there's usually a payment, and a lot of that data gets dropped. And is that payment happening via Apple Pay or Shop Pay, or is it happening via the card instruments? Is there something else going on there? And fundamentally, we have disconnected advertising from commerce historically. Like, those two just don't connect, which is why the Klarnas and the Affirms of the world are building shopping apps, because they're trying to build that ecosystem and connect the two. But there's been many people that have tried to connect advertising and commerce, and very few that have succeeded. So this is going to be interesting to kind of watch play out.
And I think the biggest platform war in fintech to follow is the wallet wars, which we always talk about. It's probably Apple and Google Pay are the two biggest. Maybe someone else figures out an interesting way in, but they own the two mobile OSs, which are where the wallets live, and so that will be one of the most interesting ones to figure out.
Well, especially as we head towards like passkeys and more of my identity sits inside of my wallet, and more of my authentication and my ability to make payments. If all of that's sitting in my wallet, and we potentially want to have more data privacy, and we want to be able to transact online in lots of different places, you could see a wallet following you around online and a passkey following you around online instead of a cookie, instead of a URL.
Yeah.
We're still building a lot of this commerce on top of stuff that was from the 90s and the early 2000s, and it's showing its age with some of these issues from a platform standpoint.
Yeah, I think one of the other big questions in tech is always who owns what data and the right to permission what data. I both love and hate litigation, because the reason I hate it is often no one wins, right? Except for the lawyers. Like, companies get stalled, products get stalled, consumers get, bent out of shape, and then 60% of the proceeds go to legal firms, and it takes 2 to 5 years, and the world has changed in the meantime. So that's why I hate it. But it does serve a purpose. But one of the things I love about it is that litigation often requires you to look back at history and precedents and kind of understand the world we live in from a legal perspective. So I think one of the interesting bits of legislation to consider here is the 1925 Federal Arbitration Act, which is when you sign into a website, you basically, as a consumer, say, I accept that I cannot engage in a class action. I will instead be subject to individualized arbitration. And generally speaking, not a lawyer, spend a little bit of time on this. If you're a lawyer and you're like, Rex, you're saying something completely wrong, feel free to interject or add something in the comments. But generally, that's been the case where a lot of consumers can't enter a class action because of the terms of service engaged in on the internet. That is one of the reasons why creators, not consumers, are the class here. And also, creators have huge audiences in a way and are easier to wrangle, even though there are lots of them, than consumers. So who owns, authorizes, and permissions data? So one, consumers have these terms of consent where they say, okay, I'm going to be arbitration. Also, the consumer is the one who authorized this activity while installing the Honey browser, right? And so now you have a question, whose opinion matters more? Like, technically, the user did say, yes, do this for me, right? And the creators say, no, that's not what you wanted me to do, or us to do. And to connect this back to fintech, Section 1031, banking data, who owns and controls banking data? We have a precedent now that consumers get to own and control their banking data and who gets to use it, and they get to authorize that. And for a long time, banks were like, whoa, I don't know, man. You can't take our data. And the consumer was like, no, this is not your data, and Plaid and others were like,
man.
this is not your data, right? These are not perfect comparisons, right? I'm sure people can pick this stuff apart. But this is what's interesting about litigation is that it often points to these bits of legislation, to legal precedent, that then define who owns what data and why. And then in litigation, you can get new precedents that then are applied to other parts of the ecosystem in kind of surprising ways. Like I've heard people say that for the 1925, Federal Arbitration Act, it was like considered a pretty small thing. And now it's actually become, here we are 100 years later, a pretty big thing. And so you can also have these surprising drifts in how regulation and legal precedent gets applied to tech ecosystems. We've talked, ad nauseum about Section 231 for a long time, especially with, the Cambridge Analytica scandal and Facebook and the 2014 elections. And so if you're a founder building in fintech, the most important thing is like talk to your users, build great product, that kind of stuff. But you also have to understand and be able to sometimes, reach all the way down through a lot of this crud to understand what the legal implications are of what you're building, because you're often building on new technology that's going to make it very hard to understand, like, what is the legal precedent? When Plaid got started 15 years ago, like, who owns banking? I don't know. Like, no one's ever asked this question before. And so now in this, we're talking about who owns the right to permission things in a pretty narrow sense on YouTube, but it may have broader implications over the next 2, 5, 8 years in ways you don't necessarily expect.
Fascinating that that precedent got created by somebody building a company, and the banks were like, nope, this is our data, and consumers got so much value from that product existing that there was then a pushback kind of the other way. But that sort of runs counter to you need to understand how the existing laws and frameworks look in order to build a business. I'm pretty sure the Plaid guys, when they were setting out, didn't necessarily go deep on all of the laws and the compliance frameworks that existed, but then it started to get big, and then they would have had to. And I think there's a stage in that journey where, to your point, if you can get that product market fit flywheel and it's there, then your unlock is going to be understanding this space just enough to continually move the business forward and grow, because there are a lot of companies that changed precedents in the last decade of fintech. Plaid's one of them. Robinhood's another. We weren't selling options to consumers, and that still gives me, frankly, a little bit of heartburn in terms of how it's done. But you cannot argue that no company has done more for helping consumers get into investments that they never were doing before. And that democratization has been absolutely massive for a form of financial inclusion that wasn't previously there. So change the precedent. But the only way to get there, and Robinhood have done the same thing, they've had to get very tight on how they lawyered up and how they figured out compliance. And that's really ultimately going to be what takes you from being a great idea to a great business. You become a great business in financial services when you figure out the law on the compliance side. That's when you hit scale.
Yeah, and technology changes often mean the existing regulatory frameworks don't apply, and you actually have to kind of push them by building something new. One of my favorite examples for this is actually parking in San Francisco. In the early 1900s, cars didn't exist. There were, buggies, bicycles, and public transit. And then cars came onto the scene, and you go back to these articles from over 100 years ago, and they're like, cars are ruining the streets of San Francisco. And they're like illegal, and they're a threat to horses. But people kept buying cars, and eventually it got integrated. And now we don't even think about the fact that there was huge resistance to cars being able to park and drive in cities. Now there's the opposite problem, arguably, right? We have too many cars. People are upset again. Maybe we actually did it wrong in the first place. But these technology things force you to interact with your existing regulatory framework, and then the world changes.
It does consistently do that. And the creator-led media landscape has changed. So there's the old pestle analysis, political, economic, social, and technology. And I think the technology can push you back up that framework, that the economics change when the technology changes. And then the society around things change. And when society changes, the politics change. And that starts changing regulation and laws. And we've seen that using Plaid as an example. The technology was available so that you could access that data through screen scraping and passwords and many other things, and now tokenization and beyond. But what that did is it created an economic incentive for Plaid and many fintech companies to build new businesses. And that became a social norm that consumers loved so much that it became a political issue. And then, of course, you were able to successfully change regulation in order for that to become just baked into how we do everyday business. The same is true with creators. You have a technology change, the emergence of these new platforms and the ability to create that capability. An economic change, which is they advertise through affiliate links. A social change, which is, oh my goodness, we have this controversy, we don't like how this is necessarily working. Will that too change how the social and political landscape understands how advertising and commerce work around creators? And I expect it to do so. Whether it's this litigation or something else, something's going to come along where the role of the creator, the outsized influence they have on commerce, is going to get directly drawn. And we're just scratching the surface of where that goes.
Yeah, if you had to take this episode and make predictions based on it, one of them would be creators will continue to be ascendant. Creators will continue to get engaged in all aspects of society, from how we do commerce to how, who controls what data and why. There probably will be more litigation from other parties too. It's going to be interesting. Let's sum it up maybe too in just the takeaways here for the audience. I think number one, we already talked about. Creators are ascendant. 2, platforms. They rule everything around you. Advertising is everyone's least favorite business model, except for all the others, and it always creates these weird things. And then, court cases, they take a while, but they can have surprising implications on how the broader ecosystem works. Do you feel like there's some other things there we covered that we should really drive home?
I think we're going to see much more fintech connectivity with creators in the near future than we've seen in the past. And I think this is going to come to B2B as well as B2C. So it's not just the big consumer creators, but there are creators like ourselves, but many others who have big B2B audiences. And that's going to be even more interesting because you always want to, show me the incentive and I'll show you the outcome. That space is going to be really interesting to watch.
That is true. I mean, most of it has been consumer creators, but I'm sure you get lots of offers, and maybe even accepted some for business sponsorship. I get pushed now ads or recommendations by creators through Instagram. Sometimes, it's a separate ad just from Instagram for like a Plaid or a banking as a service platform. I saw the first one, I feel like 2 years ago. I was like, when did that happen? When did like B2B SaaS start advertising on social? It's like, well, I guess now. So yeah, I think that is a good point. B2B commerce, and commerce is the wrong word, but B2B go to market.
Yes.
Hasn't been impacted as much by creators. But if you look at B2C commerce, it's going to start to come to B2B as well.
I think it will. I mean, look, I'm a living example. I work for a fintech company, so does Jason Mikula. There will be others, I suspect, in the near future.
Yeah, I think that's a good thing to end on. So thanks for helping me unpack this, and it'll be interesting to watch, although it'll probably subside in interest and then pop its head back up every couple of 6 months or so.
Well, let's see. Thanks for having me. It's great to be back, and till next time.
All right, till next time. Cheers.